Hi everyone, here's your girl Winnie with EXP Realty. This is Time with Winnie. Please subscribe, like, and share. Comment in the comment section if you have any questions at all about what we're about to discuss. Today we're going to dive into the current interest rate, how it affects the current buyer. We're going to go to the right sources to get information of what's actually happening. And we're not just going to go by what everybody else is putting out there on the internet. We're going to get ourselves informed and informed correctly. Okay. So let's go over to Zoom and I'm going to share my. Okay. So here we are. Um, so I typically always go on the Freddie Mac page because that's a Federal Home Loan Corporation, and that information that I've had here has always been accurate. So I just go over there. So today, June 16th, it says mortgage rates surged at the 30-year fixed rate. Mortgage rates moved up more than half a percentage point, marking the largest 1 week increase in our survey since 1987. And we're going to go back to check how the interest rate has been over the years, okay? These higher rates are the result of a shift in expectations about inflation and the course of monetary policy. Higher mortgage rates will lead to moderation from the blistering pace of housing activity that we have experienced coming out of the pandemic, ultimately resulting in a more balanced housing market. So everything that's going on was triggered by the pandemic. Okay. Before COVID, interest rates were running at what? 4%. Oh, I'm sorry about that. 4% and 6%. And interest rates were high, depending on your credit. But right during the pandemic, interest rate literally dropped all the way to 2%, and everybody thought, okay, oh my god, this is how the interest rate is supposed to be. Of course, we all want good interest rates, right? We want great numbers for interest rate, but we don't have control over that. It's the economy and the market that has control over that. So here we see that 30-year fixed rate mortgage is 5.78%. So you might get a little points less if you have great credit, and that's why it's always good to make sure that you're maintaining your credit at a good point. And also 15-year fixed rate mortgage is 4.81. The lower you go, the nicer the rates become. We have 4.33% for 5 years adjustable rate mortgages. And so we're going to look at how the rates has been going since 2021, right? So week ending Thursday, June 17th, exactly a year ago, the interest rate that were at 2.93, 2.24, 2.52 for 5-year adjustable rate mortgages. This was awesome. However, during that time, people, when you talk to people to buy, most people that were really like knew the real estate market understood that, okay, this is a steal. Let me go ahead and buy it now, right? Um, Others were hoping it would go lower than that for them, and so they were going to wait. And most realtors, including myself, kept telling people this is the best time to buy. Yes, the market is very competitive, but if you can get yourself into a home, you will be great, right? And most people got into homes. Others decided to wait, and now the rates are what? Almost three times what it used to be in 2021, a year from now, um, a year a year ago. And now let's look at 2022. I'm just gonna go over it. Look at that. We already know. And even beginning of the year, right in March, it was still 30-year mortgage was still in the fours. In January, I actually closed a commercial loan at 4.5, which was great, right? Look, in February, in December, let's do January, it was like 3.22 for a 30-year fixed mortgage. So I'm gonna pause here before I go back into the previous years. This should tell you that when you're ready to buy real estate, when you check your finances and take into account everything and your expenses and everything, and you feel like, okay, it makes no financial sense for me to be renting right now, I must go ahead and purchase a home. Yes, interest rates are very important. They, make or break your bank, but you have to prioritize, like, what's your priority? Is your priority to get a low interest rate, or your priority is to get into a home where you eventually build equity and, kind of catch up to your investment? So that's something you need to consider. I know most buyers are confused. I talk to a lot of people in a day, first time home buyers mostly, and they are all confused and say, oh my God, everybody's saying interest rates are high. What do I do? But what I want to say is, your pockets, if you can afford to buy a home or not, if you're ready or not, right? If you have enough money saved for closing costs and down payments, which runs anywhere 2% to 5% of the total purchase price, and you believe that wherever you live now that you're paying rent, one, is too expensive, not comfortable, you're not building any equity, you're basically paying for somebody's mortgage, then you need to make that hard decision, or not so hard decision, that it's time for me to purchase a home. I think I'm ready and I'm going to go for it. Okay. Because this is not the worst rates America has seen over the years. I'm going to go 3 years back, and then we're going to look at it. Well, 3 years back, 2019, we were still at 3.75, which was great. Now let's go over here and see. See, you see what I'm seeing? Okay, now we're gonna go 5 years and see how the interest rate was. 2018, you look at 2018, we had a little bump up. We had a little bump up in October 2018, right? So it ran up to 4.94%. Now we're going to go 10 years ago. Ugh, it did a lot of movement. So 10 years ago, see, the rate was like that. 10 years ago was, 10 years ago was like 2012, I think. America was just coming out of the recession or something like that. And so I wasn't even in the United States at that time. And so, but I'm just looking at this chart, and we were still at four. And so we're going to go here to all. So here, 1981, 16.74% in 1981. We're going to go back and see what happened in 1981, but this is not a friendly interest rate at all. So that's that's to tell you, look at that. 1984, 1985. This is over 30 years ago, right? 1988, 1990, up until 95, 97, 99, it started coming down a little bit. See? So 207, it went to 6.4, 6.7%, 7.9 in 201. So like I said, this is not the worst rate America has seen. So it's up to you to decide what you want to do. Do you want to keep paying rent? Because mind you, even in a recession or an inflation or whatever, the market crashes, you're still going to pay rent. You're still going to pay rent. You're not going to be expected to live somewhere for free. Even if it's for free for a period of time, you're still going to have to pay. During COVID, I actually did a video where I explained that there's forbearance. Let's say people that were put out of work due to the pandemic, or homeowners in general, if you just called your mortgage company and said, oh, I'm not able to pay my mortgage at this time, they would give you a grace period, and they'll put it at the end of the loan. There were ways to, go about it that, the mortgage companies were going about. and making sure that people still had their homes and they still had the flexibility and that breathing space not to have to squeeze out money to pay their mortgages. And at the same time, renters were being put out by landlords because they're not paying their rent. So, just imagine the benefits of owning a home. You could have still been in your home if you owned a home rather than renting and being put out by your landlord. So that's just an example that I'm giving. But at the end of the day, it does boil down to you and what you think is right for you to do today. If you think it's right for you to buy in this market, then go ahead and take advantage of it. Prices are going down slowly, and I'm going to go to InfoSparks from here. Please comment, let me know if you have any questions. So this is just to say that if you're ready to buy a house and you feel like it's the right decision for you and your family, and you're paying rent and not making anything, not gaining any equity, then speak to a professional, find out what you're capable of doing, and go ahead and do it. And with the interest rates, you can always refinance. If the rates go down, you can always explore refinancing your loan, which will bring you to a lower interest rate. We saw lots of homeowners refinancing in 2021. Okay, I hope this helps. I hope this kind of helps you in your decision making. My name is Winifred Opari. I'm with eXp Realty. If you have any questions, feel free to reach out to me. Like I always say, I do not have to be your agent. I don't mind sharing good information for you, aspiring homeowners. I hope you have a wonderful rest of the day. And thank